The people want to be prosperous, independent, and wealthy. To remain poor while witnessing the prosperity of neighboring nations is deeply painful. Mustafa Kemal Atatürk. Hi everyone. Let's dive straight into something fascinating. History has a way of repeating itself, especially in financial markets. And today I want to show you a pattern that is repeated for nearly a century. Let's start with a few examples. 1929. Joseph Kennedy made 3 key moves about 6 months before the crash: cash, gold, and positioning for volatility. When the market fell 89%, Kennedy made $50 million, while everyone else lost everything. 1987. Paul Tutteridge Jones made the same 3 moves: cash, gold, volatility. On October 19th, when the Dow Jones fell 22.6% in a single day, Jones made $100 million. 2008. Michael Burry, John Paulson, and others did the same: cash, gold, volatility. While the financial system collapsed, they made billions. And now, in 2025, Warren Buffett, Ray Dalio, and Bill Amann are observed making the same 3 moves. Always the same moves. Just 3. The exact same 3 that have worked before every major crisis in the last century. Isn't luck. This isn't random. It's a mechanical pattern. Crashes always follow the same sequence: extreme prices, too much leverage, a triggering event, forced selling, panic, and the investors who see it coming always make the same 3 moves. 1. Cash conversion. Exit before risk exceeds potential reward. Protect your capital. 2. Gold accumulation. While in cash, protect yourself from inflation and currency devaluation. Hard assets like gold preserve purchasing power. 3. Positioning for volatility. Protecting wealth isn't enough. Profit from the crash itself using options, CDS, or other volatility instruments. When these 3 moves work together, you create the perfect positioning. Move 1 shields you from losses. Move 2 shields you from inflation and currency risk. Move 3 has the potential to generate wealth as the market collapses. And after these 3 moves pay off, comes the real event: buying at the bottom. 1929. Joseph Kennedy summer, 1929. Kennedy slowly converted his stock positions into cash. By September, mostly in cash. The Dow peaked at 381 on September 3rd. 7 weeks later, Black Thursday. While ordinary investors watched their wealth evaporate, Kennedy was ready. Calm, protected, prepared for the next step. 1987. Paul Tudor Jones. Summer 1987. Jones converted stock positions into cash. He held gold, and then put options exploded in value during the October 19th crash. One day, $100 million. A legendary trade. 2008. Michael Burry and John Paulson Burry started buying CDS on the housing market in 2005. At first he lost money, but in 2008, those contracts turned into hundreds of millions. Paulson did the same on a bigger scale, making billions. 2025, Buffett, Dalio, Amann Buffett has $325 billion in cash. Central banks are buying gold at record levels. Hedge funds are betting on volatility. Why? Because history is repeating. Every crash follows these stages. Bubble. Assets get overvalued. Euphoria. Everyone believes prices will rise forever. Leverage. Borrowing goes up. System becomes fragile. Trigger. A small event starts a chain reaction. Forced selling. Leveraged investors panic and sell. Panic. Prices collapse. Liquidity disappears. During this cycle, the 3 moves: protect, preserve, and profit. Where are we now? 1 historic cash positions are being built. 2 central banks' gold purchases are at record highs. 3 put options and CDS activity is rising abnormally. History points to one thing: the storm may be approaching. But remember, this is not investment advice. We're simply observing a pattern that has repeated for a century. Most people will ignore it. They'll say, it won't happen this time. AI will change everything. The Fed will save us, just like in 1929, just like in 1987, just like in 2008. A small group stays calm, prepares, acts with a plan, not panic. They build wealth not during panic, but in the quiet before the storm. So, do we join the pattern, or get lost in the crowd that ignores it? History always writes itself. Those prepared don't disappear in crashes. They own the new beginnings. And again, this video is not investment advice, just an observation, not a warning, just awareness. If this video gave you a new perspective, if you can see the repeating pattern in history, then we'll follow this journey together. The next 12 to 24 months could define a generation's financial future. History never punishes the prepared, but it never forgives the unprepared. If you found this video interesting, hit the like button, subscribe, and turn on notifications. We'll follow this pattern step by step and watch history unfold in real time.